Happy Friday. As the mortgage market opens, we're up slightly on interest rates, 6.92 to be exact on the 30-year fix, which is up from last week, 6.87. And where, yes, this move is minor in nature, it reflects undercurrents or the tones of the uncertain nature of the market. And as we saw this week, any shift in tone from Washington around trade, tariffs, you name it, can have significant impact in how the market responds. So this week we want to cover on really what we're seeing, kind of the tonality shift and change within market, and then also some useful tips, bridges, as the bridge loan is serving our clients at the highest level, and ultimately how you can put that to work for yours as well. So let's dive into it. As we've been seeing over the last few weeks, the uncertainty in market has been all over the map, here, there, behind us, you name it. It has been incredibly volatile. And as we saw last week, the escalation coming from President Trump around wanting to fire Jerome Powell, markets did not like that. You layer in the tariff drama with China and really all of our foreign counterparts, it made for turbulence within the mortgage market and really financial markets as a whole. Well, this week, that tonality shifted and ultimately was walked back in that Trump stated he has no intentions of firing Powell. And then our Treasury Secretary Scott Bessent came out and said, hey, it looks like the tensions in trade talks with China is fundamentally starting to de-escalate. And that ultimately created some momentum for the upside with specifically stocks, but also with mortgage-backed securities, ultimately improving from the recent highs. But a lot of this can be fundamentally in the short run not ideal for mortgage rates. So let's dive into that. So right now, where yes, the tensions around trade, it appears for the time being, keyword time being, that we're seeing some kind of de-escalation. It appears that a deal with China is forthcoming. Now, obviously, no one knows. We haven't seen any specific headlines around it. But here, one would think that, hey, good news in markets would translate into good news for mortgages. And unfortunately, it's the opposite. Mortgage-backed securities bonds ultimately thrive in uncertain markets for the most part, as we've seen in past. Doesn't necessarily bode well in every instance. But when we hear of a potential trade deal coming to fruition, we'll see, like we saw this week, stocks soar and bonds potentially pull back as it's indicative of an expanding economy, consumers spending more money, which ultimately yields to potential inflationary concerns. And investors in the bond community are going to expect a higher return on their dollar, which in turn would push rates higher. Now, this is obviously fluid. We're continuing to monitor this in live time, and the market is as well. But for the time being, we're kind of bobbing and weaving in this turbulent environment, which in turn, rates are responding positively for the moment, as are stocks. So really the things that we need to be acutely aware of and things that we should be watching out for our clients and for ourselves, the performance of the 10-year Treasury. We've seen sporadic moves over the course of really this entire year. As we start to see kind of consistency in that, should translate into more favorable mortgage pricing. Additionally, headlines. Headlines will ultimately drive the narrative, whether it be good or bad. So things that we definitely need to be aware of. And inflation. With the tariff component, we're seeing, again, inflation rear its head. Inflation will continue to drive the narrative. So something we need to absolutely be acutely aware of and communicate to our clients to ensure that they're acting in the most appropriate manner. And lastly, I want to close with bridge loans. Yes, you've heard me talk of them multiple times they're over, but as we're seeing this cycle extend, we're almost 3 years into it. A lot of buyers and sellers have made the decision of, hey, we need to move. However, we have to sell our home in order to qualify for the new property. If you're running into any client that presents those challenges, there are significant options available that we have access to, from your traditional bridge all the way down to what we would call hybrid bridge. If you want to know more, or if you're running into challenges just like that, please reach out. We're here and happy to help. As always, let's make it a fantastic Friday and an even greater weekend. Thank you.